Well, Oliver Bell helps oversee about $10 billion worth of emerging market assets in his role as Pictet Asset Management Senior Investment Manager, I should say, and he's with me now. Thanks very much indeed for coming in. So tell me a little bit about your investments in the Middle East and North Africa in light of the political unrest, in light of recent events. Is it still an attractive prospect for you?
I think it's very important to separate North Africa and perhaps the other peripheral countries with the GCC. They've become two very distinct investment opportunities. And I think North Africa, where you've got these issues, you started in Tunisia, now Egypt, it could spread if this continues into Algeria and maybe a few other countries. Whereas there's sort of a tranquility, if you like, inside the GCC in the sense that there's almost business as usual over there.
Yeah, GCC it's always been sort of somewhat politically, economically, socially removed from the rest of the Middle East, hasn't it? Perhaps with the exception of Bahrain. Does that mean that you are overweight in that region, underweight everywhere else?
That's exactly right, yes. And I think as you saw the move from Tunisia into Egypt, started reducing more and more positions in North Africa, to the extent now I'm very little exposed in North Africa, but as a consequence, moving more and more into the GCC, where I don't think you'll see the contagion.
When we take a broader look at emerging markets right now, inflation really the big concern, driven by rising global commodity prices. Whereabouts is being hardest hit right now?
Well, it's food inflation inside emerging markets is a huge component of the CPI basket. You know, in India, it's 45% of the CPI basket. In China, it's about 30%. And that's replicated across most emerging markets. So it's really about food inflation and how that plays out. And I think some countries now are getting ahead of the curve in terms of interest rate rises, but some countries are starting to lag.
So how are you positioning your fund, your investments in emerging markets with that in mind?
I think we're favouring those that are less interest rate sensitive. So historically, countries like Turkey have been very sensitive to interest rates. Egypt is another, although clearly it has other issues. And we prefer perhaps some of the more commodity-oriented countries, such as Russia.
You're big on Russia?
Yes.
Tell me about that.
Well, Russia, 40% of the index in Russia is oil stocks. These oil stocks have massively underperformed and are extremely cheap. I'm talking about things, depending on what oil price you use, they could be on 3 times PE this year. So very interesting, especially from a value investor's perspective. Of course, it's a hedge against the inflation that you're seeing across the world. So that in itself, you may see some tax changes later in the year that would benefit these oil companies. So
you're
very
enthusiastic about energy, as you say, or oil and gas stocks in Russia. Any other industries that you're focusing on in emerging markets?
In emerging markets, I think we're probably just. I think if you look at China in particular, they've got ahead of the inflation curve, if you like, in terms of lifting their interest rates. And I think at some point those banks are becoming too cheap. So, you know, maybe you've got some more interest rate rises, maybe one more interest rate rise coming.
And how are you responding to that?
Well, we're starting to look at the banks there. Internally, we think the inflation will peak in China probably in April, and therefore the market might start looking through the inflation problem.
Good to talk to you. Thanks very much for coming in. Oliver Bell, Senior Investment Manager for Pictet Asset Management, helps oversee, $10 billion in emerging market assets. Thanks very much.